Welcome back to the Dorian Finance Podcast, where we discuss finance, business, and much more. I'm your host, Dorian, and I'm thrilled to be your guide on your path to financial freedom. Let's get started. Can you do me a favor and follow my podcast and leave a review of my podcast, because that really helps me get this out to more people and help me to improve my content. President Donald Trump's $250 million civil fraud trial in New York City. From what I could get out of many different news sources, New York Attorney General sued Donald Trump, saying that Trump had overstated his net worth by between $812 million to $2.1 billion, which benefited the organization to gain better rates and more favorable benefits. What's odd about this case, in my opinion, is there is no victims, because the banks and lenders got their money, got their payments, and if Donald Trump loses this lawsuit, it will cost him $250 million. He will not be allowed to do business in New York City again. He won't be allowed to be a board member of a New York company. The court will cancel Trump's New York business license. My opinion is that this is to put more pressure on Donald Trump to win the re-election. This case is going to take a lot of time, which means that he won't have time to campaign. The reason why I'm highlighting it is not because it's political, not that I like Trump or not, but that it literally, if President Trump loses, it's going to set precedent. It's going to change how businesses are run in New York City. Because in other countries, overstating your business value is normal-place. It is the job of the banks and lenders to find out how much you're worth, how much your company is worth, because that's their business. That's their job to do. So for this to be a court case, it's very odd to me. If Trump loses, change how businesses are run in New York City. I can see businesses leaving New York City out of fear of getting sued like this. And I will leave in the show notes a different podcast that covers more in detail this lawsuit.
What can AI do for stock market investors? AI stands for artificial intelligence. AI has the potential to impact the stock market in many ways. Here are some of the ways AI can be used in the stock market. Algorithmic trading. AI can analyze large amounts of market data at high speeds and making trade decisions based on predefined rules or learned patterns. These algorithms can execute trades much faster than a human trader and are often used for high-frequency trading. I want to note that high-frequency trading is also the reason why some hedge funds can go out of business and lose billions of dollars right away, because another hedge fund realizes their pattern, their preset determined ideas, and then manipulates the market, which is illegal, to basically kill another hedge fund. AI can analyze historic stock market prices, data, news, social media sentiment to predict about the future price of a stock. AI-powered robot advisors can create and manage investment portfolios for individual investors. These platforms use algorithms to determine the optimum asset allocations based on an individual's risk tolerance and financial goals. I've tried using robo-advisors. I've tried ETFs as well, and personally I find actively managing my stock portfolio has given me better returns compared to the portfolios with the fees included with them. Now, the next thing AI can do is manage risks associated with an investment. It can analyze a portfolio's exposure to various market factors and suggest ways to minimize that risk. Market sentiment analyzation, which AI can, again, analyze news articles, social media posts, and other sources of information to gauge the market sentiment. What is the market sentiment? That's what the population thinks about the stock market, which is, do they think it's going to keep going up? Is it positive? Or do they think it's going to go down or negative? This information can help investors and traders make more informed decisions. AI can offer personalized investment suggestions based on an individual's financial situation, goals, and risk tolerance. Now, AI can also be used to create a market simulation of an environment for testing trading theories, strategies, and evaluate their performance without risking real capital. Many stock market platforms actually offer this. It's called paper trading, where you can test your trading skills and strategies without risking any money and to see how well you're doing and if you're doing good or bad. It's important to discuss that AI offers advantages in terms of data analyzing and automation. It also has its own set of challenges, including the risk of an algorithm trading error, i.e. another hedge fund figuring out their algorithm and then hacking it so then you sell out all your stocks. AI is not a guarantee of success in the stock market, as financial markets are influenced by a complex interplay of factors including economic conditions, geopolitical events, and investor sentiment. Also, it's like I said, hedge funds will kill each other, or the average Joe investor can figure out ways to kill a hedge fund. Example of that was GameStop being pumped by the average Joe investor that actually killed a hedge fund. Investors and financial institutions should carefully consider the benefits and the risk of using AI in their investment strategies. Now that I have discussed the pros of AI, some of the things that I can see it being used for, honestly, as long as you manage the AI and you keep your strategy and your preset determined algorithm a secret from other people, I can see AI being used to help grow. I can also see it being a risk of, let's do high frequency trading where you're basically making a penny per trade, but then the algorithm messes up and then you lose $1 and then all your profit's gone. However, I can see a world where algorithms do the work and you're just managing them. On my last podcast, I talked about cryptocurrency in general, so go back and look at that. I'm going to talk about more specifically Bitcoin and Ethereum. What is Bitcoin? Bitcoin is a decentralized digital currency that was created back in 2009 by an anonymous individual or group. We don't know yet.
Here are the key aspects of Bitcoin: decentralization, blockchain, limited supply, volatility. Now, the pros of Bitcoin, like I said, decentralization. Bitcoin operates on a decentralized network, which means it is not controlled by any single entity, government, or bank. Limited supply means that Bitcoin is capped with a supply of 21 million coins, which creates a scarcity and can possibly make it a store of value similar to precious metals like gold. Borderless. Bitcoin can be sent and received anywhere in the world with an internet connection, making it a borderless form of currency. This has been used for remote work. Instead of paying an individual through their currency and dealing with foreign exchange, some people will just use Bitcoin as the form of payment. Now for the cons of Bitcoin. Price fluctuation, which means it goes up, it goes down, it goes rapidly changes quickly, which can cause, if you bought it too high and it goes down, oh my god. The next is the lack of regulation. The lack of consistent global regulation can lead to legal and regulatory uncertainty. Some countries have imposed restrictions or straight up banned Bitcoin. The US hasn't determined what type of regulations they want to put on Bitcoin, which can affect its use. Irreversible transaction. Bitcoin transactions are irreversible, which means if you send funds to the wrong address or become a victim of fraud, it can be challenging to receive your funds. Next is market risk. Bitcoin's price can be influenced by speculation trading, news events, and market sentiment, which can introduce several risks for investors. Now moving on to Ethereum, which is similar. So what is Ethereum? Ethereum is a decentralized blockchain platform and cryptocurrency that was introduced back in 2015. And I'm not even going to attempt to pronounce the creator's name, and it was also a group of people that co-founded as well. It is often referred to as a cryptocurrency, but Ethereum is more than just a digital money. It is a platform that enables the creators and executing of smart contracts and decentralized applications, also referred to as dApps. Here are some key components and features of Ethereum. Blockchain technology, smart contracts, decentralized applications, dApps, community, and ecosystem. The pros of Ethereum, the smart contracts, are self-executing contracts with predetermined rules written in the code. This feature enables a decentralized and automatic agreement, increasing efficiency in various applications. Decentralized applications. Ethereum provides a platform for developers to build decentralized apps, dApps. This has led to an ecosystem of dApps ranging from decentralized finance or DeFi platforms to NFT marketplace and more. Next is active development. Ethereum is constantly evolving with upgrades and improvements. And like I said, community and ecosystem. Ethereum has the largest and most active developers in their community, fostering innovation and collaboration. Many other cryptocurrencies and tokens are built on the Ethereum platform. And also, again, they also have the first mover advantage because Ethereum was one of the first platforms to introduce smart contracts and dApps, giving it a strong first mover advantage in the blockchain space. The cons of Ethereum. First is it's very complicated to develop on Ethereum, which can affect the new developers because they have to know how to write security smart contracts that require a deep understanding of blockchain and cryptographic principles. The next is regulation uncertainty. Like other cryptocurrencies, Ethereum has faced many different scrutinies of regulations. Some governments has banned it, some governments has restricted it. The US government hasn't really ruled or developed many restrictions yet on it, which has investors kind of scared of investing in Ethereum right now. The next is competition. Ethereum faces competition from other blockchain platforms that offer scalability solutions and unique features. Competing platforms may lure developers and users away from Ethereum because of ease of development. Now, what does all this mean? First of all, anyone can create a cryptocurrency themselves, making it very risky. Bitcoin and Ethereum are the oldest, so they both have first mover advantage, and they are the ones that investors have invested in the most. However, again, they literally have unlimited competition emerging, and they are not tied by any assets, any physical value whatsoever. So there's a huge risk in it. I find myself investing in Bitcoin and Ethereum, knowing that it's really playing the greatest fool's game at this point. I do believe that the blockchain and smart contracts are a interesting concept of use, but right now it's really a risky investment. I've only invested a small portion of my money that I'm willing to lose. I bought it, Bitcoin and Ethereum, pretty high, so I've lost money if I sold, but I'm keeping right now. Comment below what you think about Bitcoin and Ethereum, and if you have any more takes or spins on both of them, let me know. Moving on to my top financial YouTubers of 2023. First one is Ram Stefan with 4.5 million subscribers, and personally I like Ram's style of videos, and it's also cool that over the years he still has kept this feel of being a YouTuber, even though he has built it up to over 4 million subscribers, and he could really just do something else, but he continues to do it himself and makes it feel the same real feeling that his original videos had. The next two are really news stations, but again, they cover finance, and they cover anything and everything that can affect the stock market. So I like both of them. First is Bloomberg, and even though they are a news station, even though I feel like they are starting to focus more on political spins instead of just give us the facts and give us everything that we need, but that's one of them. The next is Yahoo Finance, which I used when I started investing in the stock market. And I personally still use Yahoo Finance for many different things, and I like their system. Hopefully they don't disappear somehow, but I like their channel as well. The next is Dorian Finance, which is the best new YouTube channel starting back in Q3 this year, with over 69 videos and counting. The next is Pennies Not Perfect. This channel, I find I like Mary's energy and her positive vibe throughout her video, and it keeps me focused on the entire video. Sometimes finance and business topics can become dry topics. Now moving on to Side Hustle Nation. Personally, I like that they highlight entrepreneurs that are using side hustles to retire, and unique and interesting ventures that a lot of financial shows don't talk about. The next is Wealth Hackers, but then I was watching his videos, and Jeff's energy and fast pace kept it very entertaining, kept it very simple, and I enjoyed watching his videos. I literally was stuck watching a couple hours worth of his videos because they were so good and informative and a great style. The next is Financial Education. The name alone is awesome. I like his style of looking at the charts and doing technical analysis on companies and the overall market. I personally like that he goes really in depth, and then he really, instead of just, oh, here's my opinion, he gives why. Why is my opinion this, based off of the information, based off of the facts, and he shows his work. I like that. The next one caught my eye because it was Debt-Free Millennials, and anything that says millennials kind of catches my eye a little bit. I like her financial goals videos, and not many people do that, and I like her energy, like the topics. And then the next one, almost anyone who looks at financial videos or business videos knows of him, Grant Cardone, because he has 2 million subscribers, and I like his podcast. I listen to him quite often. I haven't watched many of his videos. A lot of his stuff is more going towards motivational. Out of all these financial YouTubers, I think Dorian Finance is the number one newcomer of them all. And I think everyone should subscribe to his channel and comment below if you listen to this podcast. Moving on to how to budget using the 50-30-20 method. 50 is your essential needs, 30 is your wants, 20% is your savings, and reducing debts. Number 1, start by determining your total monthly income. Number 2 is you're starting to create your budget. First is you're allocating 50% of your monthly income towards your essential needs. What is essential needs? That is your rent or mortgage payment, utilities such as electricity, water, gas, phone bill, internet, that type of thing, essential groceries, foods, transportation, which is your car payment, gas, or public transit if you're taking that, and also your car insurance, your minimum debt payments that you need to pay every month. Number 3, your wants, the 30%. These are non-essential things that you want but can live without, such as dining out, cable, subscriptions or streaming services, shopping for clothes, electronics, or hobbies. Gym membership, you can argue, is a benefit that you should have, but you can also do working out at home, body weight type stuff, and then also personal care expenses can be a non-essential too. Travel and vacations, those are non-essentials. Number 4, the last 20% of your income is for savings and lowering debts. Categories are your emergency fund contributions, you should have one. Next is your retirement savings accounts, such as a 401k, a Roth IRA, and also if you have debts, paying extra to lower your debts, and then investing for the futures. Number 5, keep an eye on your spending throughout the month to ensure that you are staying within your budget that you have set for yourself. Number 6 is really don't beat yourself up on it, and also life circumstances happen, financial goals can change. Be prepared to adjust your budget as necessary. If your income increases, consider allocating more into your savings or debt payments to lower that faster. If you face a unexpected expense, you may need to temporarily adjust your budget to, account for that expense. And number 7, review your budget to assess your progress towards your financial goals. And also, life happens, but this is a learning lesson. We don't expect a 1-year-old to be able to write, read, and stuff like that. It's a progress, it's a system and you have to get used to it. So also this helps you stay motivated, but also helps you to improve your budget over time as well. What do you think of how to create a budget? I've also created some videos on this as well, blog posts. If you need a visual aid for that, it's on my website. What do you do to budget, and what's your thoughts on budgeting? How to invest in gold. Gold as an investment dates back hundreds, if not thousands of years to ancient civilizations from the Egyptians, the Greeks, the Romans. They all used it as a form of currency and value. Pros of investing in gold is it's a wealth preservation, i.e., gold has a long history of maintaining its value over time. It is often used as a hedge against inflation, like right now, and economic instability, making it a reliable store of wealth. Basically the same thing, but safe haven asset during times of economic uncertainty, political instability, or currency devaluation. Gold is often seen as a safe haven asset, its prices tends to rise. I.e., if you look at since 2000 to now, gold used to be about like $300 an ounce, and now it's at almost $2,000 an ounce. Portfolio insurance. Gold can act as an insurance against callous economic events or market crashes. Its value may increase when other assets decrease in value, providing a buffer for your portfolio. All of this is, again, when the stock market goes down or there's uncertainty, gold goes up. And all of these almost can translate to silver as well. However, silver has been lagging behind quite a bit compared to gold. Cons of investing in gold. Lack of income. Gold doesn't generate income like dividends from stocks or interest payments from bonds, doesn't pay rent or provide cash flow. Next is storage and insurance costs. If you buy a lot of physical gold, you might have to consider storing it and insurance costs to protect your investment. This additional expense that other assets don't require. And lastly, long-term performance. While gold maintains its value over long term, it may not provide the same level of return on investment that other assets, such as stocks, may give you over the long term. Multiple ways of investing in gold. First one is you can buy gold coins, gold bars, even jewelry. The next is buying ETF in gold, which is a exchange traded fund, such as SPDR Gold Trust, GLD, and iShare Gold Trust, IAU. This allows investors to buy shares backed by physical gold. The next is gold mining stocks, which is you're investing in gold mining companies that will provide you with upside of gold. However, it also provides you with the downside of gold. And also they have expenses to pay. They have to pay the miners. At one point, gold miners had to have the gold price be about $600 to just break even, which caused them to not be a good investment. And also, gold mining stocks do sometimes provide a dividend. I have a blog post going more into the factors that affect the gold and more options, more ideas as well, and video as well. If you're more of a visual person, go to DorianFinance.com for that. My YouTube analytics for October 4th through the 10th, I had 918 views, which was a 75% increase. I had 7.2 hours of watch time, which was a 72% increase. I got 15 new subscribers, and my top 3 videos, the first one was how to find, buy and hold investments, FIRE movement, pick best credit card, Dorian Finance Podcast with 815 of those views, which was my podcast that I just repurposed and uploaded to YouTube. The next video was how to increase your income by 1% to 5% part 2 with 21 views. And then how to increase your income by 1% to 5% part 1 with 20 views. I was very excited. I was very happy that my YouTube channel was growing quite a bit. Now for my TikTok analytics, I had 17 video views, which was a 99.4 decrease. I had 7 profile views, which was a 84.4% decrease. 1 like, which was a 96.3 decrease. So you got the trend. My TikTok was doing bad. 0 comments, which was a 100% decrease. And I only got 1 new follower, which was a 8.3 increase. I did 0 videos during that week, so that's what I get, is I guess 0 results. So if you're a YouTuber or TikToker, tell me what I'm doing right with my YouTube and tell me what I'm doing wrong with my TikTok. Thank you for listening to the Dorian Finance Podcast, where we discuss finance, business, and much more. I'm Dorian, and I'm your guide on your path to financial freedom. If you have listened to this point, please follow my podcast and review my podcast because it helps me. Thank you, thank you, thank you, thank you, thank you.